Vancouver home prices dropped for the first time in 8 months last month, and that might indicate the peak of this price cycle. And there were other big announcements that we're going to dive into this week, including the Bank of Canada held their overnight rate, and the full August 2023 Greater Vancouver real estate stats are out, and there were a number of very interesting changes that have taken place. And we're going to dive into all of those and let you know our analysis. And real quick, my name is Dan, here with my business partner, Ryan Dash. And we run a team of agents here in Vancouver by the name of the Vancouver Life Real Estate Group, where we also release weekly videos to help you, the buyers and sellers out there, understand what's going on behind the headlines so that you can make educated real estate decisions. And the only thing we ask is that if you are enjoying these episodes, please share them with one person that might enjoy them as well. Okay, let's dive into this week's episode where right off the top, we want to discuss the Bank of Canada's announcement that came out on Wednesday, September the 6th, where they held the overnight rate at 5%. When we look back to where the rate hike started about 19 months ago, they have hiked rates 10 times and held at 3 announcements. So why did they hold this week, or this month rather? Well, the press release indicated largely that while inflation is still high, which makes them want to increase rates, the economy is contracting. It contracted in Q2, which would give them reason to kind of lower. So again, a bit of a tug of war, as it has been for some time at the Bank of Canada, ultimately leading them to decision to just stay put. And again, when we're talking about that, the economy, GDP contracting, well, if you remember, the estimates were for it to actually grow by about 1.5%, where it contracted by 0.2%. So that's a 1.7% swing. And while that might not sound like a big number, it actually really is. So that definitely would have led to a big factor into why they decided to hold. Looking at employment too, because that's always going to be a factor that'll lead to their decisions. It remains largely strong, but it's ultimately consistent. So employment is kind of level right now. Now, they did point out, and this comes directly from the press release, that quote, excess demand easing and with lagging effects of monetary policy, the Bank of Canada decided to hold. So essentially that means, yes, they're seeing people spending less, they're seeing the economy contract, and they know that their 10 rate hikes, their 475 basis point hikes are still basically working their way through the system. So they think that prices, demand, all the things, inflation, most importantly, will continue to come down at its current overnight rate of 5%. Now, they also like to keep the door open for themselves, where they mentioned, concerned with underlying inflationary pressures, they are prepared to increase further if needed. So, of course they are. And of course, they can also drop anytime as well. But basically what they're saying is, look, just because we're holding, don't get excited yet. Don't go spend money right away. Because of course, their sentiment, their mandate is that the bank remains resolute in its commitment to restoring price stability for Canadians, which ultimately means inflation rate back down to in and around 2%. Now, let's also not forget, they are also getting some pressure from the politicians, including David Eby here in BC, and I believe Doug Ford as well, had submitted open letters, stating that they're feeling the pain from their voters in their respective provinces. And hey, please don't raise rates any further. I will admit, I didn't read these letters. I don't think they were asking for rate reductions, but they were asking that rates were not increased any further, because they can feel and they can see all the stories here where people are having a hard time meeting their monthly bills, and that's completely understandable. So anyway, how is this going to affect the market? Ryan, why don't you let us know how this is going to be looked at from the eyes of both buyers and sellers?
Yeah, for sure. And maybe just lastly to touch on David Eby and Doug Ford, I did read some of the letters, and what was very interesting was that they were also asking for a lot more money for infrastructure spending as well. And it's funny, I think like a lot of people, they want to be seen as doing something in this trying time, but really I think a lot of the things they were asking for would be to resolve inflation that will come again maybe 10 years down the road. So I think a lot of the things they were asking for wouldn't immediately help. But nevertheless, I think it was a great political decision. It's nice to know that our feelings are being echoed, that this is also as much of, a human element as it is an economic one too. So, it's very good to at least have our politicians speaking up and be the sounding board for the Bank of Canada so that they remember it's not just a lever to pull. With that said too, when, we're looking at the fall market right now and how maybe the rate hold decision is going to affect buyers and sellers. So for buyers, first of all, your buying power will remain likely where it was with your rate hold. So thankfully, you're not under the gun again that your rate is going to go up within the next 3 months. You've actually got maybe a little bit more breathing room than you had anticipated. This will bring, again, a very small sense of stability to the market. And I think that will help with sellers. Sellers, this is the first step of good news as rates continue to climb. Your home became more and more unaffordable for the people trying to buy it. So the less unaffordable it becomes, the more, again, stability we see. The less that, in my opinion, that a government, the less they stay involved in the marketplace, the more stability it typically brings to the marketplace. So anytime they decide to check out and sit on the sidelines for a bit, I think that's a good thing. You can take a bit of a breath here. I don't think we're going to see any kind of race back to market or really any kind of, huge improvement in terms of sentiment either. I just think people are feeling like they're maybe no longer under pressure. I will say though, it is expected that inflation will print higher again. And I think the reason that they held this time round was because GDP not only flattened, it contracted, right? And when that happens, that's a much bigger piece of the pie that's moving than maybe what was before. So with that said, we won't have the baseline effects that we had from years prior. So GDP will likely clock up a little, or sorry, not GDP, inflation will likely clock up a little bit more in the months to come. But I do think that is largely baked into the decision they made today to hold. What's really kind of interesting now is if you look at the money markets, the futures markets, the betting markets on whether or not the Bank of Canada will raise rates again before the end of the year. It was, I think, before 2 weeks ago, before this week, it was like a 90% chance that the Bank of Canada was going to raise one more time before the end of the year. Money markets and future markets are now reducing that to a 1 in 3 chance. So don't get too excited. Still think there's a very bumpy road ahead. This is going to be largely data driven. So, really look to the data to get your indications here, or just come here and figure out what we're doing, right? So the last thing I'll touch on too is rents, right? So rents are uniquely tied to all of this. If rate increases continue to happen, that would push more and more people into the rental pool, meaning rents would likely continue to get higher and higher. But with a rate hold, people who were thinking about renting may now consider buying again, or may just wait and see, take that wait and see approach. So it's likely that rental rates probably won't climb to the magnitude they have, so long as we don't go through more and more rate hikes. If the rate hikes pause and we stay here, so long as we don't get a huge cut in GDP or a humongous cut in jobs, and supply remains where it has, supply is a much bigger problem anyhow, then I think rental rates will kind of stay where they are until we get either more supply, less jobs, or something else in the economy has to change before we'll see those rates drop.
And we're going to find out because there are 2 more rate announcements between now and the end of the year. The next one takes place on October the 25th. So with only 2 more options for the BOC to hold, increase, or decrease, by the looks of it, we're going to wrap up 2023 very close, if not right at 5% overnight rate. And then 2024 will be a whole new year. So that's what happened with rates. Now let's talk about what happened with home sales here in Greater Vancouver, because the data's out and we love sharing this with you and kind of giving you our opinions as to what drove it and where they're going to go next. So we always start off with sales, and last month we saw about 2,300 homes sell in Vancouver. Now, interestingly, this is a pretty substantial increase over August of 2022. And yes, that's when everything was kind of at a freeze, but we saw almost 22% more homes sell last month than a year ago. And what's fascinating to me about that is, let's consider last month, the overnight rate was at 5%. And we saw more homes sell than a year ago when the overnight rate was half of that at 2.5%, which goes to show that, yes, people felt a little bit more, I guess, confident, if you will, in a semi-stable environment. Even though rates were higher, if you remember a year ago, that was the middle of the hikes and things were going up very quickly and everyone just kind of took a pause. So even with rates double, there were more homes sold at that time frame. So just consider that, right? Because sentiment says so much about the marketplace. Confidence says so much about the marketplace. And ultimately, people will tend to absorb the rate at some form or another over time as things kind of become new norms. Anyway, yes, overall sales are still way down. We're sitting here about 14% below the 10-year average, and that's going to likely remain. And this is largely propped up because of both, obviously, the high rates and inventory, which we'll touch on shortly here too.
Yeah, and new listings, 3,943 properties newly listed for sale. That's an 18% increase compared to August of 2022, and still 5.3% below the 10-year average. New listings, I guess we've struggled for new listings for the better part of the last decade, and especially over the last 4 or 5 years. And, to touch on inventory, which is where Dan's going to take this next one, it's still the main part of all of this. Hey, Dan, what do you think?
It really is. Inventory has largely dictated what has happened with the housing market this whole year, meaning that it's surprised pricing to the upside because of so little to choose from, that the half decent homes that are available are being fought over. And we've seen basically a seller's market for this entire year outside of January. So where does inventory sit today? Well, we're still sub 10,000. We're about 9,450 today. Inventory dropped for the first time in 7 months. It's been growing for 7. We're starting to get excited, but guess what? It's pulled back here now. It dropped about 600 units or 6.5% from the month before, being July. So we're now sub 10,000 for 8 months in a row. Although I will share with you that they do revise these numbers a little bit, as a bit more data can trickle in during the first week after they've announced the data or the stats. So it actually revised up to 10,068 for the month of July. So we saw it peak above that 10K for the first time in 8 months. But hey, it's now dropping here. So where does it sit? Inventory, we're about almost 14% below that 10-year average. And keep in mind, that's not adjusted for population growth. And I know I say that every single month, but it's very important to recognize, because, hey, are there more people in GVRD today than there were 10 years ago? I mean, obviously, right? But it's worth expanding on a bit here, because we have essentially a housing shortage crisis today, and it's looking to continue into the immediate future and maybe even a bit longer here. For those of you watching this on YouTube, we're going to share a chart here that shows that inventory has been trending down for 4 straight years, and pretty substantially. And this is happening during the time where we've seen the largest growth in provincial population. So today, like I mentioned, there's about 9,500 homes for sale. In September, or in August of 2019, exactly 4 years ago, there were 14,500 homes for sale. That's 53% more homes for sale 4 years ago. So when we pull back and look at all the data we have, which unfortunately only goes back to 2005, but we're looking at 18 years here, we are currently sitting in the lowest number of homes available for August as far back as we can see. So in August of 2005, so let's go back as far as we can, there were about 2.1 million people that lived in GVRD, and there were 98 homes available for sale then. Today, fast forward. What's that?
Sorry, 9,800. You said 98 homes.
98 homes. It probably, well, no, it feels like that today. My
Feels
apologies.
like that,
9,800 homes. So fast forward to today, and we have 2.7 million people and even less homes, 9,500 to choose from. Okay, so population has grown by 28%, 600,000 people, but there are less homes to choose from. Okay, we also have building permits dropping to a current 20-year low. So what's going to happen here? I mean, inventory issue looks to maintain for years and years to come. So keep in mind, if a miracle happened and overnight there were 5,000 homes that hit the market tomorrow, we would still have less inventory and less options than we did back in 2019. It's grim out there. And again, there's no magic wand that can fix this, right? Housing does not move quick. And when the leading indicator being building permits being applied for is literally falling off a cliff here, I don't know where or who is coming to the rescue.
Yeah, I mean, it's some of those stats, Dan, are insane. I mean, a couple things really stand out to me. First of all, like you said, housing is incredibly illiquid, right? So it takes a long time for supply to come to market. It takes a long time for buyers to amass the amount of capital required to buy those homes. It's or move money around. It's not something that happens quickly. But the one thing that kind of is smacking me in the face here is in 2019, just 4 years ago, when we had 14,500 homes for sale, I would have argued that even then we didn't have enough homes, even at that number. So where that is, add in all the population growth and then retract the amount of homes by 30+% that are available for that much more people. What do you think is going to happen to price? It's a sad story, but it needs humongous change in order for any kind of change to really take place, any kind of meaningful change. And I think that this year has kind of exemplified that, where we thought for sure prices would come down based on the aggressive interest rate scenario that we've been put through. But here we are, 6% up, although we'll talk a little bit about price because in the future here, that's likely going to soften to some degree. But before we get there, let's talk about sentiment and the sales to active ratio, because this is telling a very interesting story too. So overall, we are still sitting in a fairly strong seller's market, sitting around, 23.9%, 24% overall, roughly the same as last month. We've been in a seller's market now for 7 months. So if I break it down by asset class, this is where it's starting to get interesting. So detached homes are at 14.2%. They're down 2% from last month. And that drop puts us now very near a balanced market trend for detached homes. When you look at townhomes and when you look at apartments, townhomes sitting at 30.3%, again, down 2% from last month, and apartments, they're sitting at 31.9%, call it 32%. Up 1% from last month. So the more affordable housing classes, the townhomes, the duplexes, the apartments, those are holding in a seller's market, largely driven by the fact that buying a detached home is so incredibly expensive and so much more money. But here's where these data points are giving us an opportunity. So if you look at 14.2%, that is a balanced territory. That means if you're thinking about negotiating on a detached home, now's your time. And I say this because that opportunity rarely comes about. Sellers are expecting at this point to have to deal with buyer's conditions, right? So you're no longer getting just a seller's contract anymore. You're negotiating what that means for you as a buyer. And, likely as a seller, you're going to have to look at your price. You're going to have to look at terms and conditions and dates and all kinds of other things. However, when you look at, 30.3% for a townhome, so that puts you in a strong seller's market. So if you were, a younger family, for example, and you had younger children and you're looking to make that move up into a single family home, or you're wanting to get into that neighborhood, right now, the stats are telling us that if you sell your townhome, you could maximize the sale of that while at the same time negotiate buying a single family home or a detached home in this marketplace. That opportunity rarely comes about. And so, with interest rates having just held right now, this is a silver lining, if you may, for an opportunity for families who are looking to do that move up, especially if that move up has a rental income property attached to it. So if it has a basement suite, you can offset a large amount of that new interest cost with a renter, especially with rental rates at the heights that they are right now. So very interesting time in the sentiment side of things, and a really great way of taking advantage of the marketplace.
Strategy is so important within real estate. And Ryan just kind of shared an important one, one that not all sellers and buyers may be considering. And so this is why working with professionals can help create angles for you that maybe you didn't know existed, or help you time something to help maximize the sale and purchase of your future move. And of course, price is going to dictate that too. And oh geez, this is where things are starting to get a little interesting. As mentioned off the top here, we saw prices drop as far as the HPI is concerned for the first time in 8 months, first time this year, basically. So we saw prices increase $98,000 since December. And this is, last month was the first decline, where it now dropped about $2,300 or 0.2%, bringing the typical Vancouver home to $1,208,000. We are actually higher than where we were last year. So if you bought a home last year, you're up about 2.5%, as wild as that seems, knowing the roller coaster cycle we've gone through since then, but you're up year over year. We always like to also have a look at the median and average price, because just looking at one doesn't tell the whole story. And median has a very interesting story this month, where after increasing 6 of the last 7 months, the median price got absolutely hammered, dropping $78,500 in 1 month. That's a 9% drop in 1 month, now sitting at $900,000 even. This is the second largest drop in recorded history, second to only August of 2016. And Ryan, what happened in August of 2016? That was
what did we do
here? It was the foreign buyer tax was announced.
Fair enough.
When it was 15%.
I do, but it was such a blip on the radar, and because it came back so fast that anyhow, and I had a kid that year, so everything was off.
Fair enough. Good point. So foreign buyer tax was announced that month. It was 15% back then, and it absolutely shocked and froze the market, and prices dropped immediately. So here we are again, and yet we didn't have something as substantial hitting the marketplace last month. But this is ultimately a little bit of all those massive rate increases finally starting to take place. So what then happened with average prices? Well, average prices actually rose. They rose about another 10,000, similar to the month before, sitting at 1,283,000. But average rose largely on the back of 3 mega sales that happened, including an absolute record-setting $32 million sale up in Whistler. So we are likely sitting at the peak pricing for this cycle, because I think prices are going to trend down for the remainder of the year. And median is definitely indicated that. Hard to hit a record-setting sale every month, so that's going to start to pull the average down. And whatever. And what I mean by that is it's important information, but we all know this is going to cycle. And so when I say whatever, I'm talking to the people out there who maybe just bought a home, and they're like, oh my goodness, I just bought, and next month my home is going to be worth less. Well, it doesn't matter if you, of course, got into your property to hold it, live in it, and enjoy it for at least 5 years, okay? Because the long-term landscape points to continued price appreciation, especially the inventory story. So again, prices are going to cycle, and we often tell our clients that, look, if you go in and you buy a home and you plan to be there 5, 7, 10, 20 years, whatever it is, you don't even have to look at the marketplace, right? It's going to cycle just like the stock market does. So go in, enjoy your home. And it's okay if it cycles down price-wise, because you're not forced to sell. You just pay your mortgage and you continue to enjoy that home.
Yeah, I mean, when you look at what we kind of just talked about with respect to the supply landscape, what's happened over the course of the history in Vancouver when it comes to prices, listen, don't buy a home here for 1 year. Don't buy a home anywhere for 1 year unless you intend to rent it out or do something with it afterwards, right? There's too much risk in many instances, and honestly speaking, there's too much sunk cost. So you need at least that 5-year turn. In most instances in Vancouver, that 5-year turn, you are looking up from where you were. So it's good advice, Dan. Looking at the days on market here, for example, days on market. How many days are you expected to sell your home should you go to market? We're looking at 13 days right now. So just about 2 weeks to sell your home. Still an incredibly fast time to sell your home. It's only edged up by 2 days over last month. Considering the summer months are typically quite slow compared to the rest of the year, this doesn't surprise me. It's been a slow month overall. And with 2 housing sectors still in quite strong seller market territory, that being townhomes and condos, and that's the vast majority of supply that we have. I don't expect you'll see too much movement in days on market for this foreseeable future, unless we get some miracle of supply or some other external factor that would tip the scales again. So days on market, roughly 2 weeks. And just by like historical context, in case you were wondering, on average, it's usually 3 to 6 months to sell a house, right? So Vancouver is an anomaly when it comes to how fast property moves in this marketplace. So anyways, just to bring some perspective.
Vancouver is not a normal market, and we see this and experience this time and time again, but it is the reality, and it is the market we live in. So it is important to stay current and to navigate it. And so I guess the big question is, what's next? What is going to happen, especially with prices moving forward? Because it does appear that July was the price peak of this cycle. And I know it's a bold statement to make, but when we look at the charts, when we look at the data, it's important to recognize here that if we go back, let's say the full 3 decades here, the reoccurring theme within GVRD real estate is that the price cycles, the price increases tend to last about 3 times as long as the declines before they start going up again. Now, the last run that we just experienced started in July of 2019 and went up until 2022 of April, almost 3 years here, where we saw prices rise in 32 of 34 months. Then prices dropped, as they do, for 8 months before rising again for, interestingly, 7 months. And now prices are, appearing, at least for 1 month, although that's not a full cycle, but 1 month they've started to trend down. The data shows us this will likely continue in that downward trajectory for the months to come. My current belief, based on the data, based on the rates, I think we're going to see the remainder of 2023, see the HPI continue to trend downwards, maybe 3-4% off of where we are now. And then next year will be next year, and we will see, because there's so much, as we know, that can happen in a week, let alone a month, let alone a quarter. So I think my current trajectory is typically only about 3 months. Expect prices to peel off 3-4%. And, you attach that to Ryan's strategy, and, there might be opportunities out there, and there might be a lot of reasons for people just to sit tight. Whatever it is, we're always available to chat. Ryan, what's your predictions here on what's going to happen in the next quarter or so?
Yeah, I think, one major element that we need to pay close attention to will be GDP contraction, the overall health of the economy as well, because that'll largely impact the housing sector. I think it's important too to remember that if we truly are heading into a recession, a slower time here, I think if we can continue to see another quarter of contraction in the GDP numbers, that will spell recession for sure, because employment numbers will follow after that, and they will likely peel off as well. If that happens, everything should kind of soften with it. But look to the housing cycle. The housing cycle will typically lead the business cycle. So as you start to hear the narrative change over the coming months with the Bank of Canada, we'll see if that happens this year or next year. My bet is on next year, spring of next year. I think we'll start to see a bit of a narrative change, but I think until then, you'll probably see rates hold. The Bank of Canada may move to the sideline for a little bit here to see how things unfold. Generally speaking, the housing sector, I agree with you, Dan. I think that prices will continue to soften just due to, in part, to affordability. But, if the bank does move to the sidelines, then we will gain stability too. And if we gain stability, that should bring back some more confidence. So I don't think it's all out of the woods, but I also don't think, I don't think we're a home run yet or anything. So it all still weighs in the balance. Like I kind of said that in our last podcast, but that's truly where I think things are right now.
Yeah, historically, the Bank of Canada almost always reduces rates after they hold. But of course, they broke that sort of historical norm just earlier this year. So it's wide open.
Yeah.
We don't know. They don't seem to know. It's anybody's guess at this point. But we're trying to dissect it and predict as accurately as possible. But expect a fairly slow fall market, I think. It's not going to be a spike in either inventory or sales or prices. It's going to just kind of grind out here a little bit. And, we'll see. And we will also update you every single week here on how things are moving and help you make those educated real estate decisions, because they're big ones, and we'd love to be a part of helping that turn out smoothly for you. So thank you as always for watching, listening, tuning in, and we will see you next week.